Monday, December 30th. Market analysis, Stan Ehrlich. I'm back from a week's Christmas with the family in SoCal, and those that you don't know, that's Southern California. And back on the horse again. So let's look at the E-mini. We always start out with the stock market indexes, go to futures, and then sometimes other things like the Santa Claus rally, which so far this year has done extremely well, except for today. And we'll talk about that in some length. Now, we're still in, as far as the rules are concerned, the Santa Claus rally trades, which I'll show you on the E-mini and the S&P in a moment. The daily data E-mini chart came down sharply today to a support area, that line that I've had on this chart for a long time. Probably should bring it over there. Some of the lines have shifted a little bit. I've got to make sure they're in the right spot because of the change of contract months on these continuation charts. They don't stay where they're supposed to. So I have to adjust them every time there's a rollover. Anyway, came down to the support area where it's been a couple times before, including a fantastic buy signal on Friday, December 20th, the first day of the Santa Claus rally purchase. Pretty much unbelievable, perfect timing. Last Monday, 2 days before Christmas, rallied. Tuesday, more of a rally and a new high close since we're now in 3 Santa Claus rally trades. Then Christmas is right there between these 2 days and then the 26th of December, a high. And on Friday last week, we came down fairly sharply, and today again. But we're recovering pretty doggone well at the moment, at least halfway back up on today's big earlier decline. And if we can stay here or higher, I think we're still on track for the Santa Claus rally. Now, I have some comments about that. Let's take a look at and what my opinion is, I still think we're going to make a new high. Now, it's not going to be before January, but sometime in the first couple of weeks of January. And it was the new high for the whole trend, the whole bull market, above 61.82. That's what I'm thinking we're still on track to do. But I must say, if we start closing around today's lows or lower, that picture is going to change to much more of a downside correction that could get easily down to 57.88. And if that doesn't hold, and it may not, down to some significantly lower levels like 55.70s, 5600, 5700. We'll see about that. Right now, I'm still on the friendly side looking for new highs. Now, the 1-minute chart is a 5-minute chart. And here is the Santa Claus rallies. I told you 7:10 a.m. California time, 3 business days before Christmas is right there. And that is the purchase for the first of 3 Santa Claus rally positions. The next day, Monday of last week, there's the second one almost on the low of a break for the whole day. Fantastic. And by the way, the first one never saw red. It was green from the second you bought it and went straight up, as you can see. Second entry, hardly more than a few minutes of minor loss. First one's still a profit. And then it went up. The third one, we're buying at the same time, 7:10 in the morning, on the day before Christmas. And it went straight up. Oh, sorry about my cough. I haven't gotten rid of it yet. So all 3 of these trades were fabulously profitable before Christmas. This is the day after Christmas. Well, that's the calendar. There we go. December 26th. And all three trades are still profitable all day long on Thursday last week, the 26th. But a while after the opening on the E-mini, the afternoon and the evening, and then during the night at around 3 o'clock, 4 o'clock in the morning, California time, the first one started to be a loss. The green does not represent profit or loss. It just happens to be the color I used. And then now it's pointing to the current tick. So we have a loser on the third entry. We have a very slight profit on the second entry. And on the first entry, we have a very, very nice profit. I'm going to say that the whole thing is somewhat of a wash at the moment, very slightly profitable or very slightly a loss. So from here higher, we're going to be great in the Santa Claus Valley trades, which remember, we're going to be getting out of the first trading day of January, second trading day of January, and the third trading day of January. And that is going to be on Thursday of this week, Friday of this week, and the 6th of this January, Monday of next week, a week from today. And I'll tell you exactly what time of day to get out. The entries were great, very good. Sorry about my cough. Better than most years, frankly, uh, so far this year. Now, I told you there's no trailing stop, no protective stop on this strategy that I'm aware of. That is crazy. My thought was I would have put a stop just below that low at 60.63, and I would have gotten banged out with a scratch trade on the third, a great profit on the second, and a fabulous profit on the third. Doggone it. Very sorry about this cough. It got a little worse over Christmas. Now, and I'm not sick. It's just I can't get rid of the dumb cough. All right. And it goes away and comes back. So that is not what the rules are. The rules are I gave you were exiting on the first, second, and third trading days of the new year. Thursday, Friday of this week, and Monday of next week. So we'll see how this pans out. I probably would have bailed out with a scratch on the third entry, that one. Nice profit on the second, and again, a really great profit on the third, and been very, very happy with my Santa Claus rally this year. But again, rules are rules, and I say we're slipping back down right now. These are not dynamic. These are actual manually placed lines that I can move around to put them back to the current trade. So equity is waning a little bit at the moment. Now going to the Spider daily data, bullish engulfing on the bottom of the break, just like the E-mini, fabulous. 1, 2, 3 days right up. I'll get to the 1 minute, 5 minute chart on the Spider in a moment with the trades marked. And the strategy is based on the historical S&P 500 SPY, not the E-mini, but I showed you the E-mini because a lot of people traded, obviously. So here we have the trade entries. 7:10 a.m. right there. Next day right there. And that was Friday, Monday, Tuesday last week right there. A profit on all three on the close of the third entry date, Tuesday of last week. And maintained a little bit better profit the day after Christmas. But Friday of last week, kaboom, down sharply. And Monday also. So what have we got? A very small profit on trade number 2, a loser on trade number 3, but a pretty good profit on trade number 1 at the moment. And again, I can just move these over a little bit because, and this is delayed data, so we're down here right now. No big deal. All right. What about the QQQ? We're breaking out or trying to break out of this upward slanting channel and wedges, and that goes for the statement goes for the other indexes pretty much also. So are we topping out or not? We didn't have any sell signal at the top of the marker. We had a couple of buy signals on the Spider and the E-mini on the 20th of December, which is great, and they have not been violated yet. So this is a bullish engulfing, but not oversold, so no green. And it really depends on whether we can close, maintaining a close above 508.5 for the QQQ. That would be very good and bullish, especially if we start closing above 531.60, which is what I'm expecting and looking for. Notice that with this old-fashioned trading time frame, that is 6:30 California to 1 o'clock, we're high and last. No gaps to close anymore because we did open with a down gap. So that's done. So it's climbing. Let's just see it get stronger, quicker, better. And then I have my bullish ideas, and they're still on track. The 1 minute, 5 minute chart in this case is high and last, delayed data. And we're looking at good, strong rally. It's about 10-minute delayed. So no change of opinion here either. Came into support, turned around this morning so far. Now, granted, we're still down a bit, but not anywhere near as much as we were early. Next, NASDAQ, sorry. Currently trading right here, and this is the overnight market, the futures contract. So we haven't recovered completely like on the others with shorter trading hours. But it's a pretty good return. And we're back up inside the upper slanting wedge. So I'm liking what I'm seeing. I didn't like that break earlier this morning or late last night. Quite bothersome because we could have had a new low close since the overbought condition. Little bit between a rock and a hard spot here, sort of. I do not want to close below 21,000. I would want to close above 22,116. That would be very bullish in my opinion. And we're kind of in the middle at the moment. But the longer term is up. The patterns are still hanging on. I, generally speaking, like what I see, and I'm not changing my mind. Next, hit the support on the 5-minute NQ, bouncing back pretty good. Let's just see this continue to come up, and then I'll be still able to maintain my bullishness. But again, a little bit between a rock and a hard spot here. YM, bullish engulfing at the bottom so far. Great trade for a few days. ER3 overnight had a very small loss this morning as it bumped out. One scalp did very, very nice. One overnight only held it 2 days, did well. That's about it. We're flat at the moment. Oversold condition again causes me to believe we're going to bounce. So I like that. Let's just see it come up a lot more. Now, granted, I'm already out right at where we are right now with a very small ER3 overnight trade. So we're flat momentarily. But my opinion, because of the bullish engulfing at the bottom and the overall long-term trend is still friendly. But again, it's a little iffy. I do not want to close in new lows for a month or two. I do want it to close above 43,753. Next chart is the 5-minute YM coming around okay. Okay, let's go to the Russell. Major historical support in the red zone, holding the market, oversold conditions on Friday, the Friday before Christmas. During Christmas week, which was only 4 days of trading, of course, Christmas on Wednesday, no trading. We're basically up except for Friday, down pretty good, and a little bit lower today again, but recovering fairly nicely. And the 5-minute chart didn't make lower lows, a little double bottom over a week or so. Let's see it close above 2304 and get the ball rolling on the upside again. Bonds. Whoops. Didn't work. Well, is it or isn't it not working? I wanted back in October a low to match this October low, and it could have been a little bit of a double. And we got a low November 6th, a little late, and a little bit of a double, and it worked for a couple of weeks. Up into resistance, got overbought, and stopped. I was allowing for a minor downside correction, which it did, but it didn't stop. During Christmas week, we came down even more, and we got a buy signal just last Thursday, day after Christmas. But the low of the day on that day was 113.03, and the low the next day was 113.02. One tick lower than the low of the signal day, which unfortunately is exactly where my protective cell stop at its lowest level would have been, so the signal failed to the exact worst possible tick. This doesn't happen very often, thank God. You know, the system is working very well overall historically, and you just have to take these little oopses when they happen. But the reason for the stop is that don't take large losses. We didn't. We took a loss. We're out. It just happened to be the exact tick low, unfortunately. Where we are now, where are we now? We're right back up, right at the highs of the reversal day of last Thursday. Actually made a minor new high. So I think the reversal day last Thursday is going to go down as part of the bottoming out process, and we're turning up. This line, the dashed line, the blue one, represents the neckline on the single shoulder, head and shoulder bottom, which I have been talking about for months. Disregard this as a shoulder. That's the first shoulder, head of the formation, second shoulder, and last shoulder. Therefore, the neckline is across that high, and the pivot point doesn't change for either one of the formations. And you break out. You have an objective for the single shoulder pattern way up here at 140 almost, and rallied all the way up to 127, came back to test the neckline one more time and again. Wow. I haven't seen a 3 test of a neckline, I don't know, in decades. I can't remember the last time this happened. So I'm very skeptical, but so far so good. Coming up next couple days. This should be the last move down. It should turn around and start to move up, or I'm going to be changing my mind completely and I'm off track. But I don't think I'm off track. I think it's just late and a little lower than expected. In reference to the pattern with the single shoulders, it's just fine. It's just unusual. We need to get all the way up here to 126 and a little bit higher to get to the neckline on the double shoulder. And now I'm going to move this down and move it to here. So I think there's a chance that this could be the last shoulder on a double shoulder, head and shoulder bottom, shoulder extended about 2 months further to the right than I would have expected normally. And time will tell, of course. We'll see what happens in the next couple of months. It's probably going to take that long. The double shoulder pattern has an objective of way up at 150. But we're just barely making the last shoulder low, if that is what's developing. We got a signal, didn't work. But it's part of bottoming out process frequently, not always the lowest low like we got way back here in October of 23. Great. The historic low so far. Buy signal, ER buy signal. Now, what about notes? Aha! Everything the same. Notes is actually doing it a little bit better and more accurately. Guess what? We just had a buy signal on Thursday of last week, and we did not get stopped out, not even close. We're still in the trade. It is doing very nicely as of now. And this shoulder marker, I should drop down to something along, let's move the middle of it toward here and then lower this end. Something like that. Probably could raise this up a little. Yeah. So now I think this is the last shoulder on the giant 2-year head and shoulder bottom with a double shoulder, shoulder 1, shoulder 2 head, which by itself, by the way, was this head and shoulder bottom that worked perfectly. First shoulder on the big pattern, 2-year pattern. Second and last shoulder low made last Thursday, question mark. Time is going to tell. Crude. New high for a couple of weeks. Looking a little bit more interesting. Major support is holding. Has held. No signals. Didn't get oversold. It's not overbought. We're still basically between a rock and a hard spot. So I'm going to continue to wait, but my bias is obviously getting a little bit more friendly. There's no reason at the moment for it to stop. It could easily get up to 73.30, I think, and maybe test this trend line at 74 and a half-ish. Heating oil, kind of the same thing. Up against resistance, new high for a month or so, month or two. The longer term trend is down. Going back to crude real quick, longer term trend is very ambiguous, big sideways couple of years. Back to heating oil, recent trend is basically down, but short term, I think there's a chance it could bounce back up to 2.4. Yeah, 2.46, maybe 2.47 in the next couple of weeks. It won't change the long-term trend, so I have to be careful about sell signals in the process, and we're getting pretty close to overbought. Next, bottom formation is developed, broke out last week when I was with family in SoCal, and wow, I believe there was some long-term weather forecast that says the New England area, East Coast, is going to be colder than they originally expected. Maybe that would be the fundamental reason for the rally in the natural gas. Crude and heat are also coming up some, but nothing as spectacular as the natural gas this morning. Plus, it's got a bullish formation. I showed you this before I left. We have a classic breakout. We have no problems with the way it's acting. And we have a huge move up today. It's accomplished a huge percentage of its minimum upside objective, which is up to 4.46. Right now, we've settled back down some. We do have a gap to close, so I'm not going to be surprised if we come down to the high of Friday or a little under. That would test the neckline probably. And up again. Nothing wrong with this head and shoulder bottom. Just a very spectacular rally today in particular. Look at gold. Starting to come down. Talked about the head and shoulder top before I left. We came down, got it, hit a little support on the 19th, Thursday, just before I left. Went up a little, resistance, nothing special about it, and slipping again. I don't like the fact that the neckline slants downward so much. That is not normal, but every other body part is here. Shoulder, head, double shoulder over here, or single if you want to do this instead. Make it a single. There's nothing wrong with that, but it looks like it should be incorporating this and this both. No changes. It's still got the same formation. So I don't like the fact that it's got to go all the way down here to break out of the formation. That is lowering my downside objective. I'm going to slide this to the right a few more days. It's going to take some time to get down there if it can. Now, the top formations in platinum and silver are not as radical as this as far as the neckline is concerned. So basically still bearish on gold. Got to make some adjustments maybe on this developing head and shoulder top. Silver. Breaking out. A week and a half ago, no, it didn't. Pop back, but only to resistance. Do we have a second breakout today? We're on the neckline right as we speak. I need a close, and more the better. In new low ground would be the best. Below where my horizontal line is, 29.15-ish, would be the best. Then we should be starting a move down to 24.7, the minimum downside objective. And I'm going to move my breakout line, okay, right over to yesterday. And that means the downside objective is a little tiny bit lower, no big deal. But this looks good. Single shoulder, sell signal, right? Smack on top of the shoulder high. That's perfect. 12, 12, 24. Bingo. I like it. Nothing wrong. Neckline's good. Just some support underneath the market. Nothing unusual about that. We have a couple of stair steps on the way down, probably. Let's see how this works. You can't go up above 30.445. That would not be good at all, killing the formation probably. If it stalls out and goes sideways and up a little bit in the next day or two, as long as it's not much, and then breaks below the neckline like I think it's going to do today, okay, but it just can't have much of a bounce off of the neckline. Next chart. We're at the neckline in the platinum. We actually went a hair below it, but there it is. And this is clearly a new low for a long period of time, for the whole year since March 1st, adding to the longer term bearish expectations, pattern or no pattern. Prices are making new lows for many, many months. We've got a fairly sloppy, like gold and silver, but they're not perfect. I've seen much, much better, nicer looking. But the body parts are here again. It's not doing anything terribly wrong. We're right at the breakout levels right here and right now in platinum, and it just needs a little bit more push over the edge on the downside. And our minimum downside objective should be, and I'm going to move this over a little bit. Come on, sticky cursor. Don't do that to me. Okay. All right, right there. So downside, 791.92. Yeah, call it 792. Okay. High grade, about to make new lows. Hasn't had enough strength to rally very far. We look like we have a bullish engulfing. I think there's a little prompt. Well, that's good. Okay. 2 days ago in copper. But I don't know. And I see the signal. It's a bullish engulfing on Thursday of last week. RSI has turned bullish green also, and that's telling me there's a buy signal. Having been oversold within a few days. So I think we're going to get more strength out of copper. But it's so close to crashing and making new lows for the year that if that happens, I've got to turn bearish like immediately. The trend is obviously not in my favor at the moment. The only thing I like is the support area that's proven to be really good since August. You've had 1, 2, 3, 4, and now 5 attempts to break below it, and it hasn't. And we got the bullish engulfing on Thursday of last week. So I'm not seeing anything terribly bad happening here. I'm concerned that we're super close to not following through. Okay. Soybeans. We did make new lows for a long, long period of time, but we also got oversold on December 18th and 19th. So we bounced back to resistance. I have no expectation of any sizable rally. There's a chance it could bounce a little bit more. You got major resistance areas above the market. You got a major bear trend line a little bit above the market. And I haven't got a buy signal at the bottom, just a little oversold and a rally into resistance. So I've got to maintain my bullish intermediate bearish expectations on soybeans, soybean oil. I see my strategy didn't kick in, so I don't have the colors that I normally show you guys. This is a regular candlestick, green and red body, every one of them. We did have a buy signal on December 23rd, just before Christmas, Monday of last week. An outside up day, just barely. But we made a lower low a couple of days after Christmas, killing the signal. But again, they're sometimes part of the bottoming process on buy signals, not necessarily the lowest low or the highest high. So I'm turning a little bit friendly here in soybean oil because of support, because of a signal, but I've got a doji going at the moment. That means it's uncertainty, and I'm going to wait another day or two to have something a bit more profound to say, I would think, in soybean oil. Soybean meal, I've got a little bit more of a rally. We did have an oversold, just barely condition, and we bounced out of it very nicely, breaking an old bear trend line somewhat, but not very convincing at the moment. This is a tough one at the moment. So grains are getting a little sloppy. Some are looking better, some are looking worse, and it's not what I was hoping for. I was looking for everything to just fall apart and go down while Christmas occurred, Christmas week. So this is more of a little bit friendly than I was looking to find on Monday morning here. But we're super close to overbought and at a major bear trend line, albeit broken once. I'm going to wait on this also. Meal, no comment, waiting. Support looks like it held pretty well, so, past tense. Next chart, we got corn. It is above a neckline on a head and shoulder bottom, but this last shoulder is much more extended to the right than one would expect. Normally, just after the last shoulder, you're going up just like that, and you break out, and that should have been the early part of November. So here we are a month and a half later, and we're just maintaining the second day or third day now. All the price range is above the neckline. So we broke out for one day on around December 10th, failed, but now here's our second attempt. So this does look bullish if it maintains prices above the neckline. And here's the neckline. That's it right there. Drop it back to where it should be. This is the minimum upside objective. Kill that. Upside objective is 493.50 or higher. But look carefully. Isn't that red? Today, we're overbought. Today, we have a brand new sell signal. The market is only down 3 cents. If it closes unchanged or higher, the signal is killed. If it closes any amount lower than the close of Friday, the signal is still good. This signal says the pattern is going to fail, and we're going to start to make new lows below 435 and very possibly down to 425 and even lower. If this is a good sell signal, it's coming at a bad spot. I did not want one just slightly above the neckline. The pattern says up, but the signal says the pattern's going to fail. Interesting. I got to go with my signals. We're short ER1 scalping overnight. We're going to try to get short ER3s in the next 3 days. So, looking for a break, looking for the pattern to fail. Next, we got wheat. Up against resistance, long-term trend still down, got a little oversold, no signals at the bottom or close to the bottom. Major bear trend line testing at the moment, a little ambiguous. More strength, and we might see something develop long-term bull. But right now, I got to go with neutral to down. Cattle, resistance area again being tested. The last sell signal on the top of the rally was great, lasted several days, came down quite a bit, bounced off of support. Now we're going up again. This looks like it could maintain the strength this time around. All the bottoms are getting higher and higher and higher. The tops are relatively flat around the same levels, even with a somewhat new high a couple of weeks ago, but that developed a sell signal that worked. So my bias is neutral to friendly here, neutral to bullish at the moment. Miss Piggy, next chart, the opposite. New lows. Looks like you're going to have a new low close for a couple, 3 months. It is in support, and it is super close to oversold. No signal yet, but because of the super close to oversold and the support area, I don't think this downside breakout, and it's not that big a deal, new low for a couple of months, is going to cause a bigger downtrend. I think it's going to stall out here, bottom out somewhere in the support, and start to turn up very soon this week. And the one chart that I have been following that is a stock chart is SQ. And my friend, if he sees this video, because I've added I added 2 lines, we might have had a head and shoulder top. Now let me clarify this. First of all, the big long-term picture is bullish at this point. 2 years, big trading range, huge, including new lows that developed a bottom, then back into the same big range we've seen for 2 years. Finally, a month ago, upside breakout, and it maintained a dip down to support. Another set of new highs. Okay, fine. Came down to support again, where today we are testing it again. Why this line? Because that could have been a shoulder right there. In the same day, it went down so fast, so much on December 18th that it broke that little trend line, which is a neckline. If you don't like that story, then that could be a neckline of downward slanted nature. And the high we had Christmas week on Thursday last week, is a shoulder, and the neckline has not been broken yet. Okay, let's do two things real quick. On the upward slanted neckline, the downside objective is measured just exactly like that. Get rid of some of these alerts. And the downside objective on this breakout is going to be 282.65. Well underway, and we've already been down to 86.17. But if you measure from the highest high, which is not going to change, down to the neckline, the other neckline, then you get there, and you have a much lower breakout. If it does so in the next few days, your downside objective is 73 or 74. Quite a bit different. So the little pattern with the upper slanted neckline says 82 or 3. Okay, I told you that before I left for Christmas, in the realm of long-term support. This is a little bit out of my expectation range, but both of them are relatively legitimate. So I'm going to erase that objective line. Well, I'm going to leave that one there. I'll put another one in down to 82 for tomorrow. And we're back to the E-mini. Still stalling out right there. And where are we? Okay, right about the same spot. No. Move over a little. Yep, we're right about the same spot, having bounced up a little bit more, coming back. You guys have a great day. Santa Claus rally should be getting out of your first third Thursday, and I will tell you the exact time of day tomorrow for Thursday and Friday and next Monday. You guys have a great day. Profitable trading to you.